Okay.
My question is, sorry, like, when calculating my pivot point,
Yeah.
so uh, for instance, with the example that you use,
Yeah.
you use the that bullish candle, and
Okay.
you see that you start with the bearish candle. That I just want to know the reason why. It doesn't mean that if I start with this recent bearish candle, that I will get it wrong.
You're breaking. You're breaking.
Hello? Oh, it's
You're
like network
breaking.
is very poor for me.
Repeat your question. Repeat your question. I'm trying to.
Okay, I said, why is it that you decided to choose the bullish candle, that bullish candle on the weekly time frame to use and calculate the pivot point,
Okay.
and you said that you will not use this recent uh, past week bearish candle.
Okay. That's your
Yeah.
question.
So I guess, yes.
Okay. I did explain that. Okay. Let me go. Let me repeat what I said. I said before we had these two candlesticks. Before we had two candlesticks, we had done our analysis at this point. Before these two candlesticks came up, we're not seeing these two candlesticks. We wanted to know what will happen next. So we have done our analysis. This what we have here is the result of what we have done here. So you would see that the market just started the bearish move. That's why you would not be concerned about this new candlestick. Like I said, you can just get the pivot, okay, use it as a confirmation to know if your analysis on this, the analysis you've done here is still valid. Okay, you can, okay, for example, now, if I want to get the pivot of this a week before, let's say I want to just, okay, now you've done your analysis here, you know that your bias is sell, okay? You are not looking at buying this pair because you've done your analysis here and you know that your bias is sell. You are not looking at buying, you are looking at what? Selling. So the market is already trading below your entry level after you've done your analysis here. So let's just assume you want to work with this candlestick. Let's get the pivot of that candlestick. It's just for you to confirm if what you have here is still valid. I just want to confirm if the bearish trend is still valid. So I'll just, okay, let me just get my pivot on this candle. 1.120, 1.1205 plus 1.1085 plus 1.1121. So these are pivots for this candlestick. You can see the next candlestick opened below that pivot. Even if you work with the pivot of this weekly, this candlestick we use there, if you work with this pivot, you will see that the difference, let me get the pivot, you see they are almost at the same level. You can see they are almost at the same level. So your analysis here is still very valid. Okay, some people might want to add more trades, but I don't recommend that you add more trades. No, since you have a sell trade that is running and you're trading within your risk limit, you shouldn't execute more trades. Okay, so you started selling from this point. Now you do your analysis again on this. The market is likely going to open below the pivot of this candlestick um, this week, this new week. Okay, it's likely the market will open below. You expect to do what? To still sell. So you don't say, okay, because the market is trading below, you will now execute another sell trade if you already have a sell trade. So your analysis was done here. Now, why did I decide to use this bullish candlestick? Because the market has been in an upward trend. And if the market has been in an upward trend, if I expect the market to change its sentiment or its direction from bullish movements, it has been a bullish and upward trend. If I expect the market to change its direction, or if I want to know when the bears are in the market, I would expect that the bears break this pivot, this last bullish candlestick. The bears should break the pivot of this bullish candlestick before I would buy or sell. Now let me do a back test. Now let me do a back test. We just did a prediction of what analysis and what we should expect this new week. Now let me do a back test here. You can see at this point now, for example, now this zigzag indicator, I want you to take note of that also. This zigzag indicator repaints. Okay, it repaints. Now, before this zigzag indicator moved to this point that it is right now, it was at this level. Likely it was at this level. Please mute yourself. So it was definitely at this level. I know that it was at this level before it moved to this level. So when the market broke the high of this candlestick, the zigzag will always adjust itself to the new high. Okay, if it were to be at this point, if the market breaks the level, it will adjust to the new high. So that is why you cannot make a decision to sell when you see zigzag above a candlestick. You have to do your pivot analysis. Okay, when the market is not trading below your pivot analysis or your pivot point, that is when you now decide to sell. You don't just decide because zigzag is above a candlestick, you will now sell. No, this just shows you that there is likely to be a change in trend. There's likely to be a reversal. So you still need some other things you need to confirm before you enter the market. And that is where pivot point price comes into play. Tells you that, okay, the bears are now in the market. You can now take the risk of selling this pair. Now let's look at this, for example. Now we had our zigzag at this level. Okay, and because our zigzag was at this level, we probably at that week, we probably would have done our pivot analysis on that candlestick. So let's see what happened that week using pivot analysis. Okay, remember these ones were after this, so we were not seeing this 4 candlestick 1, 2, 3, 4. What we're seeing, we're not even seeing this candlestick. We're working with this candlestick. Okay, so what do? We get the pivot value of that candlestick. Let's see what happened here. I think it failed here, but let's see what happened. 1.1199 plus 1.1049 plus 1.1118. Now, I expected, those of you who are new to trading, or probably your experience, you can see we have this currency pair. Okay, it's quoted in, we have 5 digits. It's in 5 decimal places, and I'm only using the 4 digits after the decimal places. I'll tell you why I do that, why I use just the 4 digits. What we are interested in the market is pips. Okay, and PIP starts from the 4th digit. That's the last digit on what we have here, you see. So I don't work with the last digit. Now this last digit is referred to as pipette. 10 pipettes makes 1 pip. So as a trader, what I am interested in, what you are interested in is the value of 1 pip. Okay, so that's why I work with the 4 digits after the decimal point. I don't work with the 5th digit. I work with just the 4 digits after the decimal point. I'm interested in pip and not pipettes. Okay, so We have this value for the pivot of this candlestick. This is weekly. I use the red color for my weekly. So we have that for the weekly. So that's the pivot for this candlestick, and you can see the market. I think it's opened below, but let's go down to daily time frame and get the pivot on daily time frame. This is our weekly pivot. We go down to daily time frame and locate time frame. Okay, so this is what we have here. We have this, and we have, you can see this bullish candlestick. That's where we have our weekly pivots. The weekly pivot is lying on bullish candlestick. Okay, so we're looking at buying this pair. Okay, so I think the market opened, you can see the market opened above the pivots. Okay, but since you have a zigzag at that level, you won't buy because the market, now if you follow the basic principles or the basic concept of pivot analysis that says buy when the market is open above a pivot point, okay, you would just have entered this market, okay, you would have bought. Yeah, the market bought, okay, but since you have a zigzag, now this zigzag you're seeing at this point was somewhere at this point. So since you have a zigzag at this point, you would have to consider, okay, you have to, you know, consider executing this trade or ignoring it. For me, since I have a zigzag here, I would not take the trade because this is telling me that there's likely to be a reversal. There's likely to be a bearish move. Now, what we see here is, okay, if you've been trading the market for some time, you know some move that what happens on Monday market sometimes. So I'm not surprised at this, okay? I'm not surprised at what I'm seeing here, that the market went up. Okay, so at this point where there is zigzag, it tells me that there's a reversal, so I wouldn't just jump into this market. If I want to buy this market, I would wait for the market to trade above the level where the zigzag is, probably at this level, then I can now buy, okay, and set my stop loss some pips below if I want to take that risk. Okay, so now since we have our weekly pivot on this candlestick, let's get the, what's it called, the pivot of that candlestick. We have 1.1144 plus 1.1070 plus 1.1130. So this is the value for the daily. Okay. So this is what we have here. So we expect that the market trades below before we take a sell trade. So let's see when the market traded below. See, the market opened above. And at this point, we had zigzag at this level. So if you want to buy, if you want to take the risk of buying this pair, okay, if you want to take the risk of buying this pair. Now, if you look at, let me go back to the weekly. Okay, we have this here. Now, if you look at this point where the market closed, the market was supposed to open below the weekly pivot, but the market opened above the weekly pivot. That's what we refer to as gap in the market. Okay, gap. When the market opened above the price that it closed, it is referred to as a gap. Okay, so the market jumped and opened above. So that is a false what's it called? A false, should I say a false setup? Okay, a false setup, because normally the market is supposed to open where it's closed. So it's just opened above. Okay, and that's as a result of probably activities that happened during the weekend. Okay, because while MetaTrader 4 is shut down on weekends, there are still some transaction that takes place in the market. Okay, so transactions still take place in the market on weekends. Okay, some companies, some big companies do import products, okay, from one country to their country. So such transaction, when the market opens on Sunday, you sometimes observe a gap. And sometimes maybe the president Bush might just release a speech, okay, and those things affect the market, okay. They have impact, they influence the market negatively or positively. So those things can happen on weekends. And when the market opens, the market, you would see it. When you see a gap, you know that something happened during the weekend. Okay, that's why you have gaps. Market opens above the price it closed. So normally the market was supposed to open below. So if it's opened below, that should be a bearish bias, a bearish sentiment. So what we are expecting is to what, sell this pair. So we'll go down to, we've done weekly and daily. We'll go down to 4 hours to see when the market closed below our pivot values. Then we'll consider taking a sell trade. Okay, I think this is the level. So you can see this is the candlestick. This is the candlestick that closed below our pivots. Okay, this is the candlestick that closed below our pivots. And here we have, this is our resistance. This is a resistant level. Okay, this is a resistant level on 4-hour time frame. So the market closed below at this point. You take your sell trade from that level. You take your sell trade from that level. We had a little pullback here. Your stop loss, this, you have a resistant level here. It's like 41 pips. You set it some pips above. That will be around 50 pips. Let's say 51 pips. So the minimum profit you should go for, minimum TP should be, if you're risking, the minimum risk you should take, risk reward should be 1 to 1.5. That's the minimum, with the worst you can set. So if you're risking 50 pips, you should be expecting, say, 75 pips from that trade. Okay, so the markets went down. Okay, this is just, it's less than 40, that's 46 pips. So in such trade, you know what to do. You would have adjusted your stop, because setting your stop loss above this level, when you enter the market, your stop loss is above this level, you had a new high here. So when the market breaks this level, okay, this level at this point, you should have adjusted your stop loss to somewhere at this level, because you had another resistance at this level. So you can set your stop loss, you adjust it from the level that it was here to the level that, to this new resistance level. Okay, so the market gone, didn't give you much profit. Okay, so what happened? The market retraced. Look at the daily, you would see it well on the daily. So the market went down and you had a resistant level here. You have a resistant level here. So the market now broke that level. That's why I said tomorrow we'll have another class, so that we'll focus on resistance and support. Okay, so I just wanted to concentrate on pivot points. Okay, so the market closed above this resistant level, and you can buy from this level. If you are buying when the market breaks a resistant level, that level becomes a support level. So you can set your stop loss some pips below that support level. You set your stop loss some pips below that support level. If you enter, let's say the market closed, let's go to 4 hour and see when the market closed above this resistant level. Let's go to 4 hour. You can see this is the candlestick that closed above that level. So you can take your trade from this level if you want to buy. Set your stop loss some pips below this level, maybe 10 pips below this level. When the market gives you your reward, you reduce your risk. Okay, this is 55 pips and you are risking, let's say 40 pips, you should expect nothing less than 60 pips. The market gave you 54 pips. At this time, you should have adjusted your stop loss to your entry point, okay, or probably above your entry point, some few pips above your entry point. Never let a trade that has given you profit turn to loss. Okay, so that is that for daily. That's if we had used this, okay, it would have been bearish, but the market opened above the pivot point. Okay, so that is that for this week. Okay, now questions before I move to the next pair. Questions. If you have question, unmute yourself. Mr. Nwoko, I hope I answered your question. Mr. Nwoko.
Yes, sir. Yes, sir.
Okay, so if you have any question, Mrs. Ogaga, you have question. Mr. Theophilus, you have question, please drop it. Let's look at the next pair. This class, we'll end this class in the next 15 minutes. Okay, we end this class in the next 15 minutes. So if you have questions, please ask. So we'll look at 2 or 3 more pairs before we end tonight's class. And tomorrow, same time tomorrow, I should be online. I should be here. We should be having a meeting tomorrow. Okay. So I actually don't like having meetings when the market is open, but we'll see what we can do. I do my analysis on weekends like this, on Monday to Friday. All I do is execution. Even most times my setup before Wednesday, I've already entered trade, so I'll just be monitoring the trades, adjusting my stops. That's what I do. Okay, so no question. Let me check my WhatsApp if there's any question there. Okay, no question. So let's move on to the next pair. Now, as a trader, you also need to understand correlation, okay, how the different pairs correlates. You need to, now, we have pairs that have positive correlation. We also have pairs that have negative correlation. So, for example, Euro USD, Aussie USD, GBP USD, New Zealand USD, I think those 4 pairs, they have positive correlation. What do I mean by positive correlation? It means that if your bias on Euro USD is bullish, okay, you expect that Aussie USD pair will also be bullish. The same thing applies on GBP USD and New Zealand USD. This would occur 70 to 80% of the time. Okay, these currencies would always move in the same direction. Okay, Mr. Woko, I got your message on WhatsApp. All currencies will always move in what? These 4 currencies will always move in the same direction. It is only in some few cases they move in opposite direction. Okay, probably there's a major news for example, Aussie, Australian dollar. Okay, there's a major news for Australian dollar. The Aussie USD might not follow what you have on Euro USD. Okay, they might just be, but after some time, these pairs will always go in the same direction. Okay, these pairs will always go in the same direction. So we've looked at Aussie, we've looked at Euro USD. We said the trend for this week is bearish. We expect that Aussie USD also would be what? Bearish. Okay, but I don't just want us to just assume. Let's look at the chart and let's analyze Aussie USD for this week. Okay, you can see the formation we have here is almost the same thing we have on Euro USD. So there will be no need for us to do that analysis. You can see the same formation. Let's go back to weekly on. You can see the same formation. Look at the 4 candlestick 1, 2, 3, 4. The same formation we have on the weekly time frame on Euro USD is the same formation we have on Aussie USD. If we go down to GBP USD, it will almost be the same formation. Let's go down to weekly time frame. You can see it's almost the same formation from here. Okay, almost the same formation. So if you are working with this candlestick, this time frame, weekly time frame, this market is still what? Bearish. It is still bearish. Now we are looking at the next thing we're looking at here is this support level. See, a break below the support level will be a good time or a good confirmation, a good time to enter this trade. You see now, a break below this level, you can consider taking a sell trade on this pair. Okay, so we don't have to do analysis on this. It is obvious that the market is trading below the pivot of this bullish candlestick. This bearish candlestick just gave a confirmation that we have more bears or more sellers in the market. The bears are in the market right now. This is a strong bearish candlestick and it's trading below. But let's just get the pivot point for this candle. So we're working, definitely you would have worked with this candlestick where you have your zigzag. These ones were just, okay, so we have our zigzag here. We're looking at this candlestick. What do we do here? We get the pivots of this candlestick, which is weekly, 1.3514 plus 1.3050. I would have to end this meeting after the next pair. I need to go get something. It's very late now. I need to get something very late. So just hope the stores have not closed. Then 1.333. Okay. Divide 3. We'll look at New Zealand USD, then we'll end tonight's class, then tomorrow we'll continue from where we stop. Let me not load you guys with too much information. Okay. So we'll start from where we'll stop tomorrow. So let's get weekly pivots. So we have, that's it for that week. Let me plot my vertical line to identify. So we'll go down to the daily time frame. The daily time frame, what do we do here? This is the candlestick. Okay, as zigzag is at this level. So what do? We get the pivot of this candlestick. Let's get the pivot. 1.3514 plus 1.3164 plus 1.233 divided by 8. So that's for daily. Okay, so you can see, so we go down to 4 hour, we wait for 4 hours to close below those levels before we'll take a sell trade. Let's see the point 4 hours. So this is the 4 hour candlestick that closed below that level. So you take a sell trade from this point. This one went well. Okay, so you take a sell, your stop loss, you can set it at the eye of this candlestick or at this point, which is 100 and something people. Like I said, you should always work with 50 pips. Okay, if the risk is this high, then I don't exceed 50 pips. No matter how high the risk is, this is too high a risk for me. So I always stick to 50 pips. So my stop loss, I'll set it somewhere around this level. Okay, around this level. Because if you look at this here, we had a little support here. So a little support that was broken and it has become a resistant level. So me setting my stop loss 50 pips, let me see. Okay, so that's a little, that's above the broken support level that's done resistance, which is still a good area to set your stop. You can see that's like 50 pips. So 50 pips, I go for like 75 pips. Okay, so even though you had placed your stop here, this is 146 pips. Okay, 146 pips. If you divide it by 2, that's 70 pips. So you can go, if you placing your stop at this level, you can go for 200 and something pips. Let's see what happened. It's around 370 pips. Okay, for me, I would have used my 50 pips and go for like 70 something pips. I can even go for more. Okay, so that is that for GBP USD and using the weekly, daily, and let me just see what is happening on the monthly time frame. Okay, good. You have a very good one here on the monthly time frame. What do we do here? Let's get the pivot of monthly. Okay, see the monthly is confirming the move. Let's get that 1.32514. Then trading stores are still open. I need to buy something. 2896 plus 1.3 252. So you can see monthly. I use the yellow. You must use different colors so that you don't get confused. Know what you're doing. So that is that. You can see. Let's go down. Let's assume we're using the monthly, weekly, and daily now. Let's go down to the weekly time frame and locate what's it called? The candlestick on the weekly time frame. Let's go to weekly. Okay, this is weekly. The weekly is lying on the monthly pivot is lying on this candlestick, which is the weekly candle. We've already gotten the pivot for this candlestick, which is using the weekly, right? This is the pivot. So the market now is trading below the pivot value, the monthly and the weekly. So if you're trading the monthly, weekly, you expect that the daily candlestick will close below both levels before you sell. So let's look at daily and see where the market closed below that level. You can see this is daily. So daily closed at this point. Okay, daily closed at this point. So still expect the market to go down. Okay, it's almost 200 and something pips risk. The market has gone with 228 pips. Okay, so another thing you need to look out for here before you take a sell trade, you have a support here. You have a support here. Okay, so you wait for the market to break this support level before you take a sell trade. You wait for the market to break this support level before you take a sell trade. I also want you to look at something on the daily time frame concerning support and resistance. I think we'll look at that tomorrow. Anytime you have a bearish candlestick on a daily time frame followed by a bullish candlestick, you have a strong support level you can work with. So anytime the market breaks this support level, okay, you what? You sell. And I will show you just a few examples on the chart. Here we have this formation. If the market breaks this level, you do what? You sell. It breaks a strong support level, you sell. Okay, look at what happened here. You had a bearish candlestick followed by a bullish candlestick. At this point, you have a what? Support level. A break below it is a good time to sell the market. Look for a good point to set your stop loss. You can start selling. If you have sold here, you would have made good profit. Just as we have here too. This place is also a resistant point now because after this bullish candlestick, we have a bearish candlestick. If the market should break this resistant level, it's a good time to buy. Set your stop loss some pips below this level. Let's look at more examples. We have this here. After this bullish candlestick, we'll look at this tomorrow. I just want to show you guys some patterns here. We have this bullish candlestick followed by a bearish candlestick. This point became a strong a resistant level. Wait for the market to break above it. This candlestick broke above it. You do what? You start buying. You set your stop loss on pips below this level. Okay, this was also a previous resistant level, so it makes it strong. You have it here, you have it here. A break above it is a confirmation to buy. Look at what we have here. We have a bullish candlestick followed by a bearish candlestick. What you do, plot, you have a resistance level. This might not be the general way traders do their own resistance and support. This is how I define my support and resistance level. This is a bullish candlestick. You have a bearish candlestick after it. A break above it is a good buy. You start buying from this point and the market went up. Okay, so let's look at more examples here. Here we have a resistance level here. This candlestick broke, traded above it. Not too much move, okay. Okay, this candlestick, it went up and later probably you would have been kicked out of that that market, okay. Not all the trades will go in profits, okay. Not all trades, you won't win all the trade, but ensure that your risk is minimized and your profit is what? Maximized. That is key to becoming a successful forex trader. If you want to be in this game for the long term, you should consider minimizing your risk and maximizing profits. Okay, losses are inevitable in this business, so as a trader, you should be comfortable with losses. Okay, you make losses, you make profits. Okay, so that's how this business works. So the last pair I want us to look at, like I said, tomorrow we'll be talking more on resistance and support level, then how to use that zigzag indicator effectively. Okay, these three tools, you need to use them well. You need to understand how to integrate these three tools, okay, to get a perfect entry and exit point. Okay, so the next pair I want us to look at is, man, this is 2230. Oh, New Zealand USD, the last pair. Okay, let me delete all these lines. Euro USD and New Zealand USD are the same positive direction, so positive correlation. So let me, okay, in object list. Man, time as well. Okay, so let's start from let's look at the monthly. You can see here on the monthly, let's see, let's just get the monthly pivot. Let's see what we have. 0.6755 plus 0.6424 plus 0.6733. So we have this as our monthly pivot. Whoa. Okay. You can see the market is already trading below the monthly pivot. That's to tell you that the market is bearish. Let's move down to weekly. So this is weekly. Just, you can see the same formation we have on Euro USD is the same formation we have on New Zealand USD to tell you that the market is bullish. So now we have this formation, this last candlestick. If we got the pivot of this candlestick, definitely the market is likely to open below unless we have a gap. There's no gap, the market will open below the closing price. So that tells that defines or shows you that the market is still bearish. But let's go down at this point. We might have a zigzag on 4-hour or 1-hour time frame. That tells you that you should expect a little bullish move. Okay, but let's go down to daily. Do we have a zigzag at that point? Okay, we have a zigzag on daily. So before you will take a sell trade here, though we have a support at this level, okay, you can enter the market at the break of the support. Okay, if you're aggressive, you can enter the market at the break of the support level. Okay, or you wait for the market to break this the low, this point where you have zigzag. But I don't wait for that. When the market breaks this support level, I will take a sell trade. Okay, I will take a sell trade when the market breaks this level. Okay, my time is up. I have less than 1 minute. 1 minute left. Let me questions. If you have questions, I might have to reconnect back. Well, maybe I would have to go and get what I want to get and reconnect back. Okay. So if you have any question, kindly unmute yourself, Mr. Nwoko, Mr. Theophilos, Mrs. Ogaga. Please unmute yourself. We have less than 1 minute. Zoom would disconnect or would cut me off. Maybe when I come back from it, go and bite. Okay, Mr. Nwoko. Mr. Nwoko first. Let me hear.
Okay, no, I think you should just go and buy what you want to buy. So
okay, okay. Maybe I'll come back for questions. Then let me just, the next maybe 10 minutes, I'll answer your questions then.